When was the last time you placed a trade and felt calm? No sweaty palms. No refreshing the chart every 30 seconds like it owes you money. No checking your P&L so often that you've basically memorized the comma placement. I need you to be honest with yourself. If you can't remember, that's not a strategy problem. That's not a skill problem. And it's definitely not a "you need a better indicator" problem. The real problem? Your position size is slowly destroying your ability to think. I've spent a long time watching traders. Brilliant ones. Hard-working ones. People who studied charts until their eyes bled, and they still lost. Not because their system was wrong, but because the size of their trades hijacked their brain. And in the next few minutes, I'm going to show you exactly what's happening inside your head every time you risk too much, and why the traders who make it long-term have figured out a counterintuitive truth that most people refuse to accept. Stay with me, because what I'm about to say might be the most important thing you hear about trading this year. Here's the thing about the human brain. It's brilliant, adaptive, and completely wrong about trading. Before you ever placed your first trade, your brain already had a fully formed belief system. Bigger is better. More effort equals more reward. Confidence means going big. You've been told this your entire life. In school, in sports, in every motivational poster you've ever half-read in a waiting room. So naturally, when you sit down in front of a trading platform, your brain does what it always does. It imports those rules. A small position feels timid. A big position feels powerful, meaningful, like you're finally taking this seriously. But here's where everything goes wrong. The market doesn't care about your feelings. Not even a little. It's not watching you. It's not rooting for you. It's not punishing you for being too cautious or rewarding you for being bold. The market is simply moving according to probabilities, completely indifferent to your sense of self-worth. And yet, most traders go to war with it every single day, carrying the emotional weight of a position that's simply too large for their nervous system to handle. The worst part? They don't even know it's happening. But I'm going to show you exactly how it unfolds, and I need you to tell me if this sounds familiar. Hey, this is Stick Trader Mind. Today we'll talk about how to trade less to make more. Subscribe to the channel so you don't miss any videos. You find a setup. It looks great, textbook even. You enter the trade, and for a moment you feel it. That buzz. That electric sense that this could be the one. Then, the market moves. Maybe it dips slightly against you. Or maybe it goes your way briefly before pulling back. And in that moment, something changes. You can't quite explain it, but you feel it physically. Your breathing tightens. Your eyes lock onto the chart like it's your enemy. Every single candle feels like a verdict. This is no longer trading. This is survival mode. Here's what's actually happening. Your brain has registered a threat. Not a lion, not a cliff, but a threat to your security, your identity, your sense of being okay. And when the brain detects that kind of threat, it does exactly what it was designed to do. It shuts down rational thought and hands the controls over to fear. And fear doesn't follow trading rules. Fear doesn't honor stop losses. Fear doesn't let winners run. Fear does one thing. It looks for the exit. You start hearing the thoughts, I should have taken profit when I had the chance. Maybe I should just move my stop a little bit. I can't afford to lose this. They feel rational. They feel like wisdom. But they're not. They're emotional reactions wearing a logic costume. And they're caused entirely by one thing. Too much risk on the line. And the scariest part? Once fear takes the wheel, your system, no matter how good it is, simply stops working. I've worked with enough traders to know that oversized risk doesn't just feel bad. It systematically destroys performance in 4 very specific ways. See if you recognize yourself in any of these. Mistake number 1. Hesitation at the entry. The setup appears. You know it's valid. You've seen it 100 times, but you wait. Just a little more confirmation, you tell yourself. And the trade takes off without you, so you vow to take the next one. But when it shows up, your hands freeze again. You're not being cautious. Your brain is protecting you from what it perceives as a threat. And as long as your position size triggers that threat response, no amount of discipline will fix it. It gets worse. Mistake number 2, moving your stop loss. You placed a perfectly logical stop. Based on structure. Based on your system. It made sense when you put it there. But then price gets close. And suddenly, that number feels unbearable. So you nudge it. Just a little. You tell yourself you believe in the trade. but you don't. You just can't afford the pain. The real cost of that nudge isn't just the bigger loss. It's the pattern you just reinforced. That pattern, repeated over months, will destroy your account. Mistake number 3, cutting winners way too early. The trade is working, it's going your way, and every tick of profit feels fragile, like it could evaporate any second. So you grab it, you lock it in, and then you watch it run another 200 pips without you, wanting to flip the desk. That's not a target problem. That's not a system problem. That's a position size problem. Period. Mistake number 4, holding losers way too long. The trade is against you, the stop is right there, but you freeze. You can't pull the trigger. You tell yourself it'll come back. Meanwhile, the position bleeds. And bleeds. Until accepting the loss feels like admitting total failure as a human being. All 4 of these mistakes share the same root cause, and the solution isn't willpower. It's something completely different that I'm about to show you. Here's something your ego really doesn't want to hear. Most traders size up because they think it gives them control. If I risk more, I can make more. If I focus hard enough, I can will this trade to work. It feels like commitment, like you're finally playing at the level you deserve. But it's an illusion. You don't control the market. You don't control what the next candle does. You don't control whether this specific trade wins or loses. You never did. The only things you actually control are your execution, your risk, and your response. And ironically, the bigger your position, the less control you have over all 3. Because the more money is on the line, the more your emotions override your judgment. Trading small isn't giving up control. It's the only way to actually have it. When your risk is small enough that a loss genuinely doesn't rattle you, something remarkable happens. You start making decisions based on logic instead of fear. You stop needing to be right about this trade. You start thinking in terms of series hundreds of trades, instead of obsessing over one. That shift changes everything. Because here's what the best traders I've ever observed all have in common. And it's probably not what you'd guess. They're not the ones with the most exciting stories. They're not the ones who hit a home run on one legendary trade and retired to a yacht, though that makes for great Twitter content. The traders who actually make it, they're durable. They're still here, 5 years later, trading the same calm way they always have. They're boring in the best possible sense of the word. Excitement, it turns out, is the enemy. Because excitement is just emotional intensity wearing a party hat. And emotional intensity is the exact opposite of what you need to execute well. They've internalized one thing most traders haven't. The goal isn't to make money. Not at first. The goal is to survive long enough for your edge to do its job. And survival requires something that most competitive people find almost impossible. Trading at a size that feels embarrassingly small. I mean it. We're talking a size that doesn't spike your adrenaline. A size where a loss is just data. Not a crisis. Not an identity crisis. Just a data point in a much larger statistical story. When you get there, something extraordinary starts to happen. And it happens quietly. Not with a bang. Most traders think compounding means doubling their account every month. They think it's about taking massive swings and getting lucky in the right direction. Real compounding is quiet. It's what happens when you execute consistently over a long period of time without blowing yourself up. It's the natural result of staying in the game, avoiding catastrophic mistakes, and letting your edge express itself across hundreds or thousands of trades. When you trade too big, you sabotage the compounding process constantly. Good week? Great. Now you give it all back in one oversized emotional trade. Build your account up? Wonderful. Now watch yourself destroy it, trying to force a win that should have happened. But when you trade small, genuinely small, something beautiful happens. You stop being your own worst enemy. You show up the same way on Tuesday as you did on Monday. Losses don't ruin your week. Wins don't make you reckless. You just execute. Day after day, trade after trade. And over time, that consistency adds up to something significant. Not because any single trade was significant, but because you survived long enough to let the numbers work. Your edge doesn't need you to be a hero. It just needs you to get out of its way. And I want to tell you what that actually feels like. Because most traders have never experienced it. When you finally genuinely embrace trading at the right size, not as a temporary phase, but as your actual approach, something unexpected happens. You feel free. Free from the constant anxiety of watching every tick. Free from the exhausting mental negotiation of, should I move my stop? free from the gut punch of a loss that wrecks the rest of your day and your evening, and probably your sleep. You can place a trade and walk away. Actually walk away. Make a coffee. Maybe go outside and touch some grass, as the kids say. Let the trade work without you standing over it, breathing on it, micromanaging every candle like a helicopter parent. And when you're free from fear, you can finally trade the way you were always supposed to. You see setups clearly. You execute without hesitation. You honor your stops. Not because you're disciplined like some kind of trading monk, but because it doesn't actually hurt. You follow your plan the same way you follow a recipe. Just methodically, calmly, without drama. Trading stops being a battle. It stops being a referendum on your intelligence, your worth, your identity. It becomes what it was always supposed to be, a calm, repeatable execution of a process that has an edge. Here's how I want you to redefine success starting today. Because this one shift changes everything. Stop measuring yourself by outcomes you don't control. Most traders track profit and loss like it's the only scoreboard that matters. But profit is just the lagging indicator. It's the result of something more fundamental, the quality of your execution. Start asking yourself these questions after every trading session. Did I trade at a size that allowed me to think clearly? Did I follow my rules, even when it was uncomfortable? Did I manage my risk the way I was supposed to? Was I emotionally neutral, or was I reacting? If the answers are yes, that session was a success, even if it lost money. Because you're building the habits, the neural pathways, the muscle memory of a trader who can execute under pressure. And that is the foundation everything else is built on. If you can execute well, the profit will come. If you can't execute well, any profit you get is borrowed time. The traders who get lucky with big positions, who double their account in a week by swinging for the fences, almost always give it back. Because the habits that got them there aren't sustainable. But the trader who executes cleanly, consistently, humbly, that person compounds. That person is still trading in 10 years. I want to leave you with this, and I want you to really sit with it. Trading is hard enough without you making it harder. The market is unpredictable. Individual trade outcomes are random. But your process doesn't have to be random. Your execution doesn't have to be chaotic. Your emotions don't have to be in the driver's seat. You can build an environment through one simple ego-bruising decision where good trading is consistently possible, where you can execute your system without interference, where you can let your edge do what it was designed to do. That environment starts with position size. Trade small. Small enough that you can stay calm. Small enough that you can follow your rules. Small enough that you can survive long enough for any of this to actually matter. Because survival is the foundation. And if you can survive long enough, with enough consistency, the results will take care of themselves. Not because you forced them, but because you finally created the conditions where your edge could breathe. That's the truth about position size. And if you let it, it will change your trading.